We got some blood in the street, so let's get right into this market outlook. Flat out. So we've been saying the last few weeks, we've seen so many cracks under the hood. We've been talking about how, the market's at all-time highs, but over 60% of stocks are trading around their 50-day moving average, maybe even below it. Things like that signal us that it's very weak participation. We were being led up by the mega cap tech stocks like Amazon, Facebook, Google for so long, and now finally we're seeing that weakness spread out to the broad market. So, we take a look around, look at the SPY, close right at this upper trend line right here, down 1.5% on the day. Qs, not so bad, they turned around, they've been relatively strong. There's a few names in the Qs that look pretty good. And the IWM, the small caps, they barely held on to support right here. They're actually at a pretty attractive spot right now, coming in 10% off highs, still above the 200-day moving average. The thing is that, in a bull market, we're still technically in a bull market, a 10% move down to the 200-day, that's usually viable. So, I don't think this market's done yet at all. I think there's a lot of, it's still very selective. I think, we still have some more pain to deal with. We take a look over to FinViz, the heat map, and we can tell how bloody it was today. All around, there wasn't a ton of strength. We see the semis were, some strength, and it's consumer defensive, some stuff like that. We saw a lot of the Corona names coming back pretty strong. We got that Delta variant, people are getting scared. Everyone's very reactive. I'm not saying lockdowns are coming, but the market's pricing in something like that. But another positive thing I wanted to look over the fear and greed index. And we're already at 18 on the extreme fear out of 100. So, I think we'll bounce at some point this week. If we get it down open tomorrow, I might be looking to buy some things. But overall, I would say it's still very selective. It's still pretty risk off. We got a ton of earnings names coming up. Ben, what are you thinking? I know you want to give them some charts.
Yeah, so again, you highlighted a lot of the points. We kind of have a similar outlook, so we can just kind of breeze through some of them pretty quickly. First one up, again, you already went over the SPY. Again, it's still in that overall uptrend. Really, the key level for us is anything above 400 in the SPY is kind of, a bonus for us. As long as we can continue to hold above that, we probably should see, the market continue to drift higher. But in the short term, again, we probably will see us pull into this kind of upper trend line that we've been on for some time. But if you move over to the IWM, which is exactly what you mentioned before about how it does almost look viable as it comes into major support, this would be one that I would look to buy up through 215.
Oh, nice. I didn't see that.
Yeah, so it's just, again, we're not, when you mentioned them, I was going to say basically the same exact thing where it's coming into support, we'll probably see it, it could shake 205, it could shake 200, but on the way back up, up through 205 or 215 for now would be the buyable spot. And if it pushes down to 205, we can find, a tighter entry. But for now, that's kind of the spot to keep an eye on if this is, the most of the small caps are going to pull down. And then moving on, again, just some chart patterns that we can continuously see. If you move over to the Dow 30, DIA, we can just see, we always harp on why we look to take profits into the retest, and we get to those times, it typically looks the best, and it's going to go higher. And we're seeing, kind of clear as day where the Dow, retested its prior all-time high, and now it's pulling back into this range. So it's just doing something that we see, over and over again. And we see the same thing in the REITs. If you move over one more chart shake to the VNQ, we can see that, in the REIT sector, the all-time high was 106. That was the all-time high. It pulled back in, started to base versus 101. It ran back up to 106 again. That's that retest. And now it's starting to pull back in, just like the Dow 30. Just here, we're seeing that same pattern. That all-time high runs up to the retest. It's met resistance, and it pulls back in. So there's very common chart patterns we're seeing in a lot of these sectors. Moving over to the biotechs, like Sheikh mentioned, some of these, names might be starting to wake back up. We can see the biotechs have just been flagging, for the past month or two, and giving us a nice, buyable trade up through 164, 165 in time for that move back to that retest of 174, like we mentioned with, the REITs and the Dow 30. Continue to move on the flip side, we talk about these H patterns or these bear flags, and we can see one clear as day in financials where there's that initial down move, from 94 down to 87. It has that little reactionary bounce, and it starts to, if you kind of draw it out, form like an H. And then as it takes out that low, you tend to have that breakdown lower, which we're starting to see financials, and we're also seeing the same exact thing in material stocks. So Sheikh, if you move over one, you'll see that same.
Yeah.
Which one?
I'm on materials. I want to point out something that you mentioned that you didn't even realize you mentioned. So We go back to the Dow 30. It was hit the hardest today, right? And we look at the financials that are hit hard and materials, as you just mentioned. What are all these value names? So this is what I'm taking that's good out of the market today is the value stocks all got crushed. We saw the growth stocks and things that have been more weak. We saw them have that relative strength today. So I'm thinking we could be near a bottom for the growth stocks pretty soon, and we could see them lead again, which would be fan-fucking-tastic.
Yeah. So again, I'm just focusing more on the chart, but again, as Sheikh just mentioned, those do all line up exactly. But that age pattern that we continue to see, that's not a pattern you ever really want to buy, especially when it's taking out that low. Lower prices tend to be in store. And then finally, again, we're talking the 10-year for just a brief moment. This is more just showing.
Plays into the growth story. You go, but I'll talk after.
And yeah, I'm just from the chart, we talk about the 4 stages where there's the stage 1 where the stock is basing, there's the stage 2 breakout, there's that stage 3 topping pattern, and that stage 4 breakdown. And this 10-year has kind of shown us like the most textbook example of this exact pattern that we see virtually with any stocks, where if we looked at materials or financials, they're kind of entering that stage 4 breakdown where stocks like sectors like the biotechs are still kind of in that stage 2 basing,
right,
maybe topping out 3 before if they had that break and move higher. So those are just kind of just some broad chart patterns that we are seeing in these major sectors. And then again, Sheikh, kind of getting in the more technical aspect of why those things are kind of all moving in.
Yeah, I mean, well, the story. Well, if you think about the story, we heard all March, April, May. It was when the 10-year was on the rise, which is technically bad for growth stocks. Investors' risk for appetite is much smaller when the 10 years is raging like crazy. So now we're seeing it break down. That just plays another story into that growth stocks could be coming back very soon. So I think that's going to be the case personally.